Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, April 9, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? First of all, we're starting this video a few minutes before the closing bell rings. I've got to be somewhere, so I got to get a jump on things. Therefore, we have an active market at present. However, it's not going to change the daily picture. It's not going to change the daily analysis. Speaking of which, where are we? Well, now they're beginning to make a bearish, wedgish kind of pattern inside of Thursday's big down reversal day. They've retraced about halfway or more of the big down candle from Thursday, and they continue to test the vicinity of this important trend line that we look at all the time. You can see it comes from the March of 2000 highs, connects over here, January of 2022, and what we can say is, above the trend line, she's bullish. Above the moving averages, she's bullish. She's teetering on, playing games with the 20-period moving average on the daily chart. The fact that they've been back and forth through it diminishes the importance of the 20-period moving average. Just below the trend line is your 50-period moving average. And what do we have this week? On the docket, we have alphabet soup. We have CPI. We have PPI. And then later in the week, we get kicked off with earnings season. Q2 earnings releases start with the banks reporting, and then from there we get a bonanza for about 6 weeks or so. Once again, here's what we do know about the trend line and Thursday's breakdown candle. Get below the trend line, below Thursday's low. The floodgates can open up for another leg down. You can count on them going into, if they do that, close below that trend line on a daily chart, close below that breakdown candle on the Thursday's close. That's going to open the door for the 50-period moving average and or lower. We had what's called a flush and recovery today. There's a lesson in there from a live trading room perspective, inside the numbers perspective, simply a trading perspective. So stay tuned for that. No change to the weekly chart, above the trend line and above all the moving averages. The trend and above the trend line is certainly your friend. It's bullish until otherwise. Once again, the month of April is an on-time type of situation. Month of April, on time. We're looking for a turn. So net, they're building a bearish kind of wedgish pattern from Thursday's low. They could take more time. And what we do know is the bogey is the breakdown candle high, 523.87. Get above that, you're off to new highs and higher. So on both sides, the bull and the bear case, we could say it's all about Thursday's big time candle. We'll have some kabuki theater situation at 8:30 a.m. on Wednesday with the release of the CPI data. Market will whip around, pick a direction and go. Whether they kill the tape or goose the tape, we don't know. But we will find out tomorrow morning. Anybody make any money today? Put it under the video. Let's hear about it. All in all, we had what's called a mini bonanza in the live trading room today. We had some stocks, not only stocks on the move, but things that came up after the opening bell that we handled in real time. We had some SPY trades. We learned something from one of the SPY trades today. Let's go through the commentary. What I urge you to do is pause the video. Read the notes and double check the work. If you're active trading the market during the trading day and you haven't taken a look at the live trading room, you're, as they say, missing the boat. It's not just the trades. It's not just the numbers. It's teaching how the market works. It's the education. It's understanding what is a trade, what isn't a trade, and why. What are your variable risks in a trade? How do you narrow your risk? How do you only take the best setups? What do they look like? We discuss this stuff all the time, each and every day. We'll start with, and we'll highlight a few important things. 518.65 is our early pivot. Above, the door opens for a push higher. We didn't need that. Below, and we'll get to the numbers a little later in the notes. But we'll note and put it on a sticky note for now, 518.65. And let me back up a second because we didn't need the higher number, but I just want to show you here at the 0 dark 30 notes, 520 was an important number from yesterday. It's a big fat round number, but there was unfinished business at 520.65. So we had a pivot. If you're above the pivot, 520.65 is a target. Below the pivot, we have different targets. 520.65. We think better in pictures. 518.65 is the horizontal blue line. As you can see into the end of the day, where did they come back to? They came back to run a test of the pivot. Market's still open. There's a couple of minutes left as I make this video. They're still toying around with the pivot. But wait, there's more. Remember, 520.65 is unfinished business. What's more? 520.65 is overhead resistance. What about high of day? Look at the first candle all the way here on the left. High of day, what is it? 520.75, 10 cents above 520.65, the unfinished business and overhead resistance. Did we have traders take a short up there? You bet your bottom dollar we did. How you doing? Let's scroll up a little bit, find out. Just to narrow things down a little bit. They're hanging around a big fat round number of 520. This is pre-market. The morning shakeout or shake up crew is either going to run a test of 520.65 or the pivot 518.65. It's either unfinished business or the pivot. The morning shakeout or shake up crew. That's what they're going to do. What did they do? You betcha. Remember, pause the video, read the notes, go back to the chart and double check the work. 921, still before the market open. 520.65 is overhead resistance. Closing candles above opens the door for the next leg higher, but it's overhead resistance. And I even gave you a narrower zone. 520.65 to 521.30 is an overhead resistance zone. Short scalp with potential. So what happened today? Traders took the short. What did they do? They made money. This is the way it works. Little snippet right into the closing bell as the goose operation takes hold. We have the end of the day jam session all the way down here less than an hour ago at, let's say, 5:15 and change, back up to almost 5:20 by the closing bell. Afternoon jam session, it's hard to kill a bull. Pause the video, read the notes, go back to the chart, and double check the work. I'm going to give you the other side. We had a long trade opportunity. It's all in here in the notes. I'm going to describe it in detail. This is where we learn something. We had a gap. They bounced it off the gap. We had some traders that scalped the gap. That was up to them. My point was, after coming up short of the gap, I felt they take the luster off the gap. I was looking a little bit lower. I was looking down here, let them spike this low from yesterday afternoon, rip it back up in the other direction for the second SPY trade of the morning. However, they cut through it like a hot knife through butter, went a lot lower. How do we handle that? This is where traders learn something. First, we learn before we enter a trade, we have to have a max loss. We have to have an uncle point. You reverse engineer your position size to what the uncle point is based on the zone we're buying or how many times you're buying or how much you're willing to buy at a particular number. Now, this is a zone we had. This was they sliced through everything. Where are they going? This was the place. So what happened when they got there? Well, it pays to know your numbers. What did traders do? Many traders, some had to take a loss. Some traders had an uncle point. They just pitched it and said trade didn't work. But others added to the position down here. It turned around. They ended up making money, got the emails in the afternoon, heard about it in this morning when they turned around, all that stuff. And one thing we had in our corner, we talked about it in the live room this morning, in real time, there was waning velocity intraday. What does that mean? That means the market is in the process of putting in a bottom. The velocity on the downside was waning, meaning it was dissipating. It was going away. How long is that going to take? It could have taken a little while, half an hour or so. However, with that in mind and the extra numbers in mind, and we had more if need be, traders have a different outlook into these trades. You're able to manage a bad trade, and guess what? Manage out of a bad trade, turning it into a profit in a lot of cases. They're not all going to work perfectly. It's not the way this business works. We all know that. We're going to have to take some heat sometimes. How you manage a bad trade, what you're able to do, separates really, really good traders from ones that still have their training wheels on. You'll get really good if you hang around long enough in the live room and learn, because the learning compounds over time. Each day you learn, each week you learn, each month you learn. You're getting better, and into the future, it's going to pay dividends. That's the way this business works. Remember, pause the video, read the notes, go back to the chart, and double check the work. It's all in here. All the numbers are in here. Everything you need each and every day is in the commentary from an S&P perspective. Then we move on to stocks on the move. Okay, fair enough. We're not in earnings season. It starts in a few days. We had a couple on the board. RTX didn't hit its number. It's a no trade. Verizon came into its number, so we'll take a look at that one among others. The number in Verizon was $40.75. They came into it, they bounced a little, got below it, hung around the number all day, finished slightly above it. It's really a non-event. They didn't do anything bad, they didn't do anything good. They hung around the number all day long. It's just a wash. But wait, there's more. We had Intel today. Traders took Intel at $37.38. What happened after that? They got the rocket ride. They got paid on Intel. This is something that came up in real time in the live room, and we did have nice participation in Intel live room traders. How about Lilly, 760.13? We're looking over here on the left. This is the place. They gave you a $5 bounce. After that, nobody cares. They bounced it at the number they were supposed to bounce it at. Funny how that works. There's another one that came up in real time. Royal Caribbean, RCL, 130.55 down to 129.45 was a zone. It's basically a buck. What did they do? Came into the zone, ripped it back in the other direction. Nice trade. Participation in the live room on this one. This is the way you do it, folks. One trade at a time. Some days we get 3 or 4 or 5 stock trades, 1 or 2 SPY trades. Other days are quieter. There's a few days where you just get an absolute all-out bonanza. You never know what you're going to get each and every day. We take what Mrs. Market gives us. Spiders are closed for the day, and what did they do? They fought back to close back above the 20-period moving average. Are there any accidents or coincidences across the market? The short answer is, of course not. Above all the moving averages, the trend is your friend until and unless your shit gets thrown out the window. What's going on over in Camp IWM? Same routine. Above all the moving averages, they're toying with the 20. Up day, up about 0.4%, relative strength against the SPY. There's really no material change. Again, they have to get above the breakdown candle from Thursday to make any hay on the upside. If they can't, they're putting in a bearish wedgish pattern, and we're going to use this zone down here as the end of the line. Below this zone, below 200, Irene's going to come into play. Irene is where they can open the trap door and a bunch of selling could come in. We'll use it as what they call in the trading parlance, a sell signal. What about the folks down at the transportation department? Above all the moving averages, nothing wrong with the tape. Pretty much on par, a little bit of relative strength, but nothing to write home about. They were up about 30 some odd points today. No big deal either way. They're eating time off the clock, same as they were yesterday, the day before, and so on. Daily chart, weekly chart looks very similar. You've got this box going on here above all the moving averages where she's eating time off the clock. No change from yesterday, no change from last week. What about the Qs? Qs are in the same position as the spiders. You have the big down candle from Thursday. They're putting in a wedge pattern, get above the high from last Thursday. That's very, very bullish. Close the day above there. That's the bull case. Below the low is the bear case. That's simple. No change. Same as the SPY. Same setup. XLF. Notice anything familiar? same setup. Above all the moving averages, the trend is your friend, but the same setup. It's a wedge pattern until or unless you can get above Thursday's high. Everything hinges on Thursday's high across most of the markets. We're taking it at face value. Up day in Smashmouth or the Philadelphia Semiconductor Proxy, the SMH, however, same wedge pattern. 20 moving averages in the same spot it is on most all the charts, and you can see here they're just eating time off the clock inside of Thursday's candle. Above Thursday's high opens the door for the former highs. Below Thursday's low, look out below. You're not going to hold 213.35. That already worked one time. First time, best time. Might want to write that down, put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I am David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.